Hi, my name is Dustin Miles. I'm with Momentum Multifamily. I'm excited to have Cyndee Harding here today to learn, and so we can learn all about asset management. So, Cyndee, if you could introduce yourself, and then we'll go from there.
Thank you so much. I'm so excited to be here today. Asset management is my absolute passion. I love it. I love it in multifamily. And so I spent the first 25 years of my career, I had my own accounting practice and I specialized in small businesses. So if you can think about an apartment complex is very similar to a small business. It has its own income, its own expenses. So it was a very easy segue to go into multifamily, which I love.
That's awesome. That's great. Well, cool. Well, I'd love to learn about, how, what that transition looked like and I assume, from your accounting background, your attention to detail and all that is, is up there for sure. Would love to learn, how'd you get into multifamily? I mean, that's and where did your background and how'd you make that transition? A lot of people that listen to the show are they're W-2 employees or kind of have that sort of background, and they're always interested about those transitions.
Well, I didn't have a W-2. I basically sold my accounting practice and
Oh,
then we were introduced into multifamily and just thought this was a great way to build our portfolio, to increase our assets. Um, so we just decided to go for it. And so in
awesome.
2019, we started
Oh, well.
and we had our first property in 2020, which was kind of an interesting time to get into multifamily. But thankfully, the property that we bought, we didn't have anyone that said they couldn't pay because of COVID. So that was really
Great.
kind of a blessing to us because it was our first property.
Hmm.
Um, but I love the transition was very easy to me because of my accounting background. And I do talk to people that want to do asset management. You don't have to have a background in accounting. The main thing is that you are very attentive to detail and willing to learn. It's a whole different beast that we do because we do have investors. We do a syndication. So we have
Yeah.
investors that we need to answer to. And what we do is we use asset management is the go-between between the property management and the GPs. And so we basically work hand in hand with the property management to fulfill the business plan that the GPs have come up when they are looking at this property and we're going to buy it. I'm GPs on all the properties that we own, but I definitely wear my asset management hat far more than my GP hat.
Okay. Awesome. And then I think you were saying you guys also offer your asset management services to deals maybe you're not a part of as well.
We do third-party asset management. Mostly we do it for a certain amount of time. If they have a property that is maybe falling behind in the vacancy,
Okay.
occupancy, or they aren't meeting the metrics that they want to meet. So we'll do a contract for maybe a year where we come in and help them really restructure the way that the residents view the leasing, which kind of sounds crazy, but if you think
Right.
about it, they think of the on-site, the leasing office, kind of as the principal's office. They only go there when they're in trouble. They go there when they can't pay their rent, or they go there when they have maintenance issues that aren't being resolved. And we really try to change that dynamic. We
Hmm.
have found that we implement a strategy that's called from complex to community.
Hmm.
And our whole premise of that is we really want to take a complex where people don't really know their neighbors. They
Yep.
just kind of go about their business, and we turn it into a community. When we look at the demographics of today, there are a lot of residents that will probably never buy a home.
Right.
I
Right.
live in Phoenix, and a starter home is 350,000, if not four,
Wow.
500,000.
Wow.
And so who can afford a starter home at that
Yeah.
price? And what we want to do is we want to provide a safe, beautiful place to live, no matter what rent they're
Right.
paying. I
Right, right,
have
right.
properties in Mississippi and in Kentucky and in Texas. We have all different demographics. I definitely have one that's a tax credit property.
Hmm.
And so all of those have some sort of, assistance that's helping them with their rent. But everyone deserves to live in a beautiful, safe place, no matter what kind of rent they're paying, no matter what the rent amount is. And we just achieve that through complex to community. And
Hmm.
we do it through several different ways. One is we always have a pay on time incentive, and that varies based on the month. Um, Sometimes it's just as simple as, maybe a bullet pop or a popsicle. You pay your rent on time, you come to the office. It gives them a
Yeah,
chance to meet the onsite in a no pressure positive way. We
right.
pay our rent, you bring your kids in. We do pizza and pay, where if they paid their rent, they come in, they get pizza and a soda. But it varies depending on the month, and we have a budget for it, but the budget really kind of goes up and down. So we have some months that we know are going to be really expensive, and then we
Hmm.
try to take advantage of those months, like, or maybe we don't spend as much money, so our annual budget isn't so large. But one of the ones that we do that is really significant is we will watch Amazon Prime in July. And when we have that day when they have backpacks and school supplies on sale, like
Oh
a
yeah.
major sale,
Hmm.
we did 60 backpacks and supplies. And
Wow.
so our incentive for August was pay your rent on time and then bring your children and have them get backpacks and school supplies. Because some people have to choose. I mean, when school's starting, you
Yeah.
have fees that you have to pay if they're in
Hmm.
band. I mean, there's just so many things that go
Or
on.
uniforms or yeah.
Yes, and so
Yeah.
we don't want them. We thought that's one way that we can ease a financial burden on our residents. And it also helps them pay their rent on time, because that could be a month that they might choose not to pay on time. And so we, tell them in August, pay on time, bring your kids. And we did 60 backpacks. And we have parents that were so excited and so
Oh,
grateful.
that's great. Yeah. I
Yeah, that
mean,
that was offered to them.
yeah, I mean it all adds up. I mean,
Yeah.
like you said, between backpacks and then school supply list and jackets and clothes and or a lot of these kids, I know my 13-year-old son, I mean, I'm having to buy him clothes every 4 months because he's, growing out of it. But
Yep.
yeah, it all adds up and gets really expensive very quickly. Wow.
Yeah, so we do the backpack in August. The other thing we do is, which now this is just, this isn't an incentive to pay on time. This is just part of our community.
Mm-hmm.
But any property that has a pool, we open the pool Memorial Day and we close
Hmm.
the pool Labor Day. That's just the
Yep.
season of the pool. And
Yep.
so on Memorial Day, that one is a little bit more expensive because we will do a big barbecue.
Mm.
Then we will find out what school district, high school, the uh, asset is in. We'll
Mm-hmm.
go to a local bakery and we'll have them make a big sheet cake that says, "Congratulations, seniors," in the colors of their school.
Oh,
And
cool.
so we honor all the seniors that graduated from high school
Hmm.
in that particular year. And if you think about it, there are probably some students that didn't get a cake, that
Yeah.
didn't have any celebration that they graduated. So we honor them. And so
Yeah.
we make sure that they come and that the whole community celebrates them, that they graduated from high school. And so we do that at all of our properties. And what we try really hard to do is uh, not only, have our complex be a place where people love to live and there where they want to stay, is we also have it be an economic part of
Hmm.
the town that it's in. So we try really hard to hire our landscaping, our plumbing, anything that we outsource that we
Hmm.
use local. So we're
Yep.
putting money back into the community. And then, like I said, we use a local bakery. We try and support those small businesses. I send all my on-sites some sort of acknowledgement on their birthday. And so
Mm.
I use a local florist, that I'll send either a flower arrangement or a balloon bouquet or something. But I really want to support those local businesses because a lot of them, that's where my residents work.
Yeah.
So we
Yeah,
try to put
absolutely.
money back into the community. We support on one of them that's in Mississippi. There are actually four communities that we own in one town. And so
Oh,
we're
cool.
able to do a little bit bigger because we do have the four communities.
Right.
So that's the one that we did the backpacks on. We also do a really big Easter egg hunt. We did 400 Easter eggs on Saturday.
Wow. Wow.
And we invited all four communities to come to one location. We have a barbecue. They have the Easter bunny that comes. We do a big Easter egg hunt. And so
Wow.
we just try really hard to do activities for our residents that help bring them together. I have one community that we've owned. We're in our fifth year,
Hmm.
and this is our first property that we purchased, and we've been able to do this complex to community. And they really have achieved it. I will say I was very happy this past Thanksgiving when I met with our on-site there. She told me she's doing a Friendsgiving, that there were
Oh, cool.
residents that lived there that didn't have anywhere to go.
Yeah.
So we supplied all the paper products and a turkey and a ham. And then the residents signed up for potluck. They
Oh,
just made
cool.
their favorite dish, and
Yeah.
they all came together at Thanksgiving and had a Friendsgiving. And that really warmed my heart. I was like, this is what we want. We want everyone to have a place to go when they have something they want to celebrate
Yeah.
and just feel like their community really supports them. And so we try really hard to work with our property management companies. We just work hand in hand with them to create this, to foster this sense of community.
That's great. I wanted to touch on real quick, 'cause we do a lot of similar things and all that, but just some people really care about, some investors really care about the community, some care about the community, but they're like, well, you just spent money, kind of what's the ROI and all that. So can you kind of touch on the thought process, but why you got you putting in a lot of time and effort and money towards creating this community, and why are you guys doing this?
We actually have a really good ROI on doing that. If you think about it, if someone is living at your property and they renew,
Mm-hmm.
you don't have to turn that unit.
Yep.
We always offer an incentive for renewal. So we do something that is a benefit to the property. So we will replace a faucet. We might put in a new ceiling fan, do a new lighting package. Uh, there are times that they ask for their carpets to be cleaned. It's not something that I really like to do because that doesn't really make a difference in the end. But
Right.
if that's what they want, that's what we do.
Yep.
We had
Yep.
one resident that said, I'd like to renew, but I need a new toilet. My toilet rocks and I just want a new toilet.
Yeah.
Well, we do any kind of renewal that's around $100, and that's a toilet. And
Yeah.
so you can imagine this resident got a new toilet.
Yeah.
Uh,
They're
if
happy as yeah, all it could be.
our
So yeah.
renewal rate on our properties are really high, so that percentage is a high percentage. We also increase the rent. So we are trying, to be competitive as far as being at market rate. Um, so it does come back to our investors. We do that. We have discovered through doing the community, we have a higher renewal. We also have a much higher referral because
Mm.
people love where they live. If their
Yeah.
friends are looking to move somewhere, we call it pick your neighbor.
Right.
You
Right.
love living here, pick someone you want to live by.
Yep.
And so
Yep.
we have a really high referral rate. We do pay a good referral rate. We do incentivize them to do that. But then also, they have to make sure that that person pays their rent on time so they can get
Right.
the referral. And, if you've got put your neck out for someone and vouch for them and said, hey, these are good people to have here, you're going to want to make sure they pay their rent.
Yep.
And you want to pay
Yep.
your rent because, you,
Yeah.
hey, this is good. And so we just find that people will do more for referrals. We get higher retention, which actually lowers the cost of
Hmm.
running the property because we're not turning the units.
Yeah, it's expensive to turn a unit.
Mhm.
And gosh, if it's a harder turn, then it gets, potentially really expensive. So, but yeah, just even to make ready, is pretty darn costly. So, yeah, that's smart. And yeah, it's really interesting to see yeah, everything that you guys do. We do pretty routinely. We'll do renewal parties pretty often where people can you we have, I don't know the size of the complexes, but usually our complexes kind of average about 225, 250, and so we'll do, in some of the busier months we'll have up to 30 renewals, which is, I mean,
Mhm.
that's a lot. And so if we can, take a lot of that off the table and a lot of that risk, it's worth spending, $100 or whatever we spend for, pizzas. So that's awesome. Is there, in terms of kind of a little more on the asset management side and all that, because you guys, you have different locations, and I think you mentioned that you work with different management companies and all that. How does I'm one thing that I could see is you probably, maybe you learn some things from this management company, and then you learn some things from this management company, and potentially kind of best of both worlds. Or how's that flow for you guys, and anything you guys have learned from working with different management companies?
Yeah, we do. We actually work with several.
Okay.
And I do, I like that
Hmm.
because where our big focus is when we buy a property, we want to see who has a good footprint in the market. So
Hmm.
even if we don't have other assets in that town, we do want to see who has a good footprint, who do we think is going to be able to help us really understand the dynamics and the demographics of our community. We also work really close with the chamber when we're in the process of acquiring. We definitely meet with the chamber. We're in the process right now of acquiring a property in Texas. And so when we went there for our due diligence, we actually met with the chamber and said, what are the businesses that are coming in? What does the
Hmm.
population movement look like? And that helps us really fine tune who is going to be the best fit to be our
Right.
property manager for this. And then that allows us, we really work hand in hand with our property management.
Hmm.
They don't work for us. We work with them. That's
Hmm.
really how we try to define it. And we go to the properties. We have where we go pretty consistently. We'll travel and we'll hit, several at one time, which is good. Kind of get more bang for our buck. And
Yeah.
that helps with the investors, their cost isn't that high. And then we really try just to, like you said, we learn from different ones and we implement that. And then we also have, we do an asset management team. I don't know if you've ever done that before, but our asset management team is actually, it's a team that I run. So
Hmm.
they will attend the property management calls. They don't have their cameras on or their mics on, but they listen in. And then
Okay.
right after our property management call, we have an asset management team call. And
Hmm.
so that's 5 to 7 people. Some are GPs, some are LPs,
Hmm.
um, that kind of want to have a better understanding of how multifamily works. And
Yeah.
what we try to do is take things off of the property management's plate,
Hmm.
because our forte is not leasing. Like, we don't know
Right.
how to do
Right.
that. We don't know what the laws are. We
Yeah.
have multiple states that we're in. And so we had a property that we wanted to, it was part of our CapEx and part of our, what we had designed in our business plan was to put in a new playground. And
Mm.
we didn't want our on-site spending time because that's a national, you have to have a
Right.
national playground company. And we
Hmm.
didn't want our on-site to spend times calling these companies, comparing, what is it going to take? And so we had someone from the asset management team that said, I'll take the lead on that.
Great.
She did all the research, she worked with the on-site to discover where are we going to put this playground. We had one request that it was done before they got out of school for Christmas break, winter
Hmm.
break.
Hmm.
And that was our only thing is we wanted it done before winter break. And the ROI on that, you can't really measure it because,
Yeah.
what do
Yeah.
you know? But we have really high retention of that property. You can see it from the road. We've had people that do drive-by and they're like, the kids are like, oh my gosh, we want to go to that playground. It's the
Yeah.
only one like that in the town. It's a really kind of a fancy one, like a city would put in. I think we spent about
Oh, cool.
60,000 on it.
Oh,
But,
wow. Yeah.
we've had people, they drive by, they see it, and the kids love it.
Yeah.
And the kids sat up on the hill for a week that lived at the property and watched the progress every day. Throw the
Oh,
water.
fun.
And, she would send us pictures of it, and they still to this day, their kids always on that playground. So
Gotcha.
how do you
How,
measure that? I'm not sure.
yeah, right. Yeah. How in terms of accountability and all that with with the different management companies and different properties and different locations that you guys anything specific or any KPIs that you guys like to watch in particular to help just you guys be as efficient as possible?
We do. We have about 10 KPIs that we monitor. Um, And we actually send those KPIs to our investors every month with
Oh,
the
cool.
newsletter. So they're able to kind of see the trend
Yep.
because we do it for 12 months. So they can see where the KPIs are, how we're moving. Are we, hitting those benchmarks? Some of them are pretty standard. What is the occupancy rate? What is the
Right.
average rent? Those are pretty standard.
Yep.
But they can see the trend of it. And we not only send it to the investors in a chart, that
Mm-hmm.
just, has the 12 months, but we also do it in a bar graph. So they're able to,
Mm.
so it depends on how people, interpret
Yeah.
information. So whether we try to kind of hit all their points, we do a newsletter where we actually talk about it. Then we send the chart that they can see it, and then they have the bar graph. So we
Awesome.
do really try to have our investors be informed on where we are, but it also allows us to watch those metrics with our property management. So they
Yep.
get that as well. So they are able to look at, we call it the scorecard. So they're
Yep.
able to look at the scorecard and see kind of where we're trending. So when we talk with them, we're all on the same page. So we do have
Gotcha.
meetings with our property management without uh, the onsite there, because
Hmm.
the onsite works for the property management. So I
Right.
make it a point to never direct or tell the onsite what to do. I tell the regional, because the regional
Mm.
then will tell her onsite, because we don't want too many cooks in the kitchen.
Yep.
Basically on the call, all I do is praise them for what they've done. So
Gotcha. Okay. And is there, I guess, trying to see, in terms of your kind of outlook for this year and beyond, are there, what's the growth strategy look like? Because you guys are in, kind of multiple markets across the U.S. Are you guys targeting, is there a certain unit count that you need to be in? Is there a certain, are you targeting, more C class properties, or are you targeting, more B, or what does that look like? And then, are you trying to consolidate, or are you, keeping with the kind of the path you guys have been on the last few years?
yeah, I think we're going to stay on the path that we're on for right now. We look for B class properties.
Okay.
That have the potential to, or maybe a C plus that we can bring to a B or
Hmm.
B minus, through this complex to community. We like about 130 is our minimum count for
Okay.
units. But we're pretty open-minded. So if we have someone that they're like, This is a good deal, we really would like you to take a
Mm.
look at it," we do look at it. And
Yeah.
so, we don't really put anything that's like off market, like off our market. We're more interested in what's out there, and
Mm.
we aren't really looking to diversify like into storage, or we're really focused on multifamily. But
Right.
within multifamily itself, we're pretty open. We do avoid the coast, and that has only to do with the insurance.
Right.
And
Right.
my insurance tell me that by third, fourth quarter, that should get a little more reasonable, but
Hmm.
we'll see what happens. That's what they say
Yeah.
every year. And then we have to see what happens with hurricanes
Right.
and things
Right.
like that. So,
Yeah, we've gone through a few renewals the last month or two, and we're seeing pretty decent
mhm,
drops.
yeah.
One thing that I'll share with you, and maybe you guys have already looked at, maybe you haven't, but especially because you're you know, um, you're diversified in locations and things like that, kind of looking at more of a master policy, that just depends on the number of units and stuff. But we've kind of been moving things from, individual policies over to kind of a portfolio or master policy, and we're seeing some pretty dramatic decreases in pricing from that.
Yeah, that could be one way we could do some coast properties. Yeah.
Yeah, yeah, or we stay away from the coast, but yeah, I mean we're in Houston, but we're still 50, 60 miles away from the
Mhm.
coast, but we've seen a dramatic drop just from that. But because you guys are in different locations,
Yes.
and that, they're insurance folks are always looking for diversity, and looking for ways to kind of hedge risk. And so because you guys are in very different locations, that could be a good place for you guys. So, but
Yeah.
yeah,
I appreciate that. Thank
yeah,
you.
yeah, you're welcome. Um, is and then so you guys are kind of continuing with that strategy, and then 130 and higher, kind of C plus, sounds like B minus maybe, or B, or better. And then are you trying to, the management companies you kind of work with now, are you trying to stay within kind of their areas, or are you open to, if it's a deal you guys really like, are you open to, a new management company in a new area, or what does that look like for you guys?
Yeah, we're always open to different property management companies. We
Hmm.
do look for the footprint. Like I said,
Hmm.
this property that we're purchasing in Tyler, we're actually using a local property management company. We
Oh,
do have
okay.
a couple of national ones that we use,
Hmm.
but with this particular property, so we really, like I said, we try to meet with the chamber. We try to
Yeah.
understand the town that we're in. And then we just look to see who's going to be the best fit. And on this particular one, it was a local company. We were referred
Hmm.
to them by a potential investor who said, "Hey, I know
Oh,
this guy. He's got a property management." We invited him to come out during due diligence. He was there with his team every day. We were there for 5 days. We walked every unit.
wow.
He had a member of his team with our team. We went into the leasing office and met with them, and just so we're really we don't have a little box that it has to fit in. We're
Right.
very
Right.
we try to look at the property. What is going to be best for this property for these investors? What are we going to do?
Gotcha. Okay. Awesome. Sounds good. And I guess in terms of asset management and all that, is there anything else you want to share with the audience, or just, or any tips or tricks that you want to share?
Well, last year we taught an asset management course. It was a
Hmm.
12-week course where it was just basically everything you would need to know in your first year. We kind of wanted to take the learning curve out of it. And so we offered this course and we taught a lot of people. And then
Hmm.
in 2025, we're not teaching it, but we will be teaching it again in 2026.
Okay.
So we're going to offer that at least 2 times, if not 3 times in 2026. And we have found that it's people that are wanting to be an asset manager or if they've just purchased a property. But we've
Hmm.
also had experienced asset managers just join the class. I'm always learning. I would sign up for a class
Yeah.
just
Yeah.
because everyone has different ways they do it and we can
Yep.
all learn from each other.
I think that's the biggest thing that, as we were talking and all that, just just honestly, between people that are, successful, and maybe not, or maybe not as successful as they could be, is I like the quote of always be a student.
Mhm.
And I think, one thing, at least within our company, and it sounds like for you guys too, we always, I don't think me or my business partner really have an ego, but like, if we, whatever ego we do have, check it at the door.
Yeah.
And I think just, like I said, just kind of being open to learning, and whether you've been doing this for asset management for 15, 20 years, or maybe you've only been doing it for a year or two, there's always, things that you can learn. Like, I'm just, for instance, like, we've been learning a lot about AI. That's
Yes.
the new buzzword, right? The last year or so. And like to think we're pretty up on all that, but I'm sure there's plenty of folks that are maybe not as experienced on the asset management side or experienced in apartment investing, but they have that AI background. They could plug into this pretty quickly and be able to help quite a bit. So yeah, I think just being open and just being a student and trying to learn as much you can is a great way to go. So how do people get in touch with you guys? How do people reach out? Maybe they have there's I think it's getting better. I think, in terms of performance, especially in Texas, a lot of things are kind of turning the corner. I think Austin's got some more time to go, but how do people get in touch with you? Maybe they, need your help. Maybe they have questions. What's the best way to get a hold of you?
The easiest way is just to go to our website, which is highcalibermultifamily.com, www.highcalibermultifamily.com. And then our team is all listed on there. So if you have questions about asset management, my calendar's on there. You can book a call on my calendar. Our underwriter is on there. You can book a call with him. I know he works with a lot of people, just
Oh,
kind of
cool.
helping them understand underwriting and some of our thought process and how we do it. Everyone has their own, ways that they do it and things that we look at real strongly. He'll let you know. Also, my son, Lorik, does asset management with me. So he
Mm.
does all the back end financial, stuff. And so we're always willing to talk with people, help them understand, even if, uh, they don't hire us or, they're just wanting more information. We'll always take a call. Just we learn from them and they learn from us. So it's a
Yeah,
win-win.
absolutely. Well, awesome. Well, great to meet you. And great to chat. Really appreciate your time, and
Absolutely.
knowledge. And yeah, I really love the way you guys are the community to, or I'm sorry, complex to
Complex
community.
community. Mhm.
Really love that. Just kind of philosophy in general. I think it's a great way to go and a great way to, if people aren't going to want to leave, they're like, well, I don't want to leave. My
Yeah.
friends are here, So
Yeah.
I think it just makes a lot of really good business sense, and kudos to you guys. So thank
Thank-
you for your time, and have a great day. Thank
All
you.
right. Thank you so much. I appreciate
Bye.
it.